Good morning, everybody. My name is Jonathan Butler. I'm the president and CEO of 1Berkshire, and I would like to welcome all of you to another 1Berkshire virtual town hall, this one focused on banking during COVID-19. I'd like to remind the audience that this webinar is live and is being recorded. And I'll share that our format today is, we have a great panel, and we're looking to do a 40 to 45 minute long discussion with that group. We will then shift to questions and answers from our listeners. For those of you viewing that wish to submit questions, on the bottom of your screen, you'll see a chat function where you can share your thoughts, and you'll also see a Q&A tab. If you can submit your questions through that Q&A tab, we'll sort through, and we'll try to answer as many questions as we can in about a 30-minute Q&A session following the panel. So I'm going to jump right in. Our purpose today is bringing together expertise from the banking, legal, and financial advising sectors to share important information and suggestions for businesses currently navigating the crisis. It's important for our local business community to understand how to navigate the present pool of resources, as well as to be thinking about the long term as we move through this crisis. I'd like to move towards our panel, and I'm going to introduce each of you quickly, and then we'll come back and hear from you. But our panel this morning includes Bob Fraser, the president and CEO of MountainOne; Jodi Rathbun-Briggs, Senior Vice President and Chief Lending Officer of Greylock Federal Credit Union. Morning, Jodi.
Good morning.
Gary Moynihan, the director of Adelson Company. And Dennis Egan, a partner at Cohen Kinne Valicenti Cook.
Morning. Morning.
And before we start, I just want to thank all of you for giving us your time. You've all been so busy during this entire 2-month stretch. So this is really, it's really valuable, I think, for our listeners to have an opportunity to hear and some insight into the things that you've been doing and that they should be aware of. So we're going to start off with, if each of you could maybe take a minute or two and just share with the audience sort of what your organizations have been doing to help Berkshire businesses and, kind of what you've been up to. So why don't we start off with Jodi?
Thank you, Jonathan. And I want to give a great big shout out to the 1Berkshire team for all the support that you're providing to our community right now, as well as our employers. And I also just want to say thank you to my other panelists for all the work that they're doing. Can you hear me okay?
Sure.
Okay, excellent. Thank you. When this COVID crisis started and we thought a work from home scenario would be good for all of us, I think that some of us thought we'd actually be able to put in a load of laundry and once in a while and take the dog for a walk, but that's certainly not the case. We've been very, very, very busy. We've been reaching out to our business members, providing some deferments and counseling for them to get through this difficult time. So if any of our business members are on the call and they need some help, just give your business banker a phone call. As far as the PPP is concerned, that has been all hands on deck. We have a team of about 25 people that have been dedicated to either helping us take the applications, process the applications, and build an electronic system to close these things quickly. During the first round, we were able to save almost 3,000 jobs. Hopefully some of you that are on the phone have been able to get these PPP funds. About $23 million we were able to move into the community. And then for the second round so far, I am so proud of that team. They've pulled together 140 loans for $3 million in about 4 days, saving 520 jobs. But right now, we're really turning our attention towards financial inclusion and access. We did find a number of the successful recipients early were larger businesses that had some resources behind them, whether it's a bookkeeper or a good accountant. Now we're turning our attention to sole proprietors and eager to help you save your business and save your employees. So that's what we've been up to. So thank you.
We'll shift over to Dennis Egan.
Thanks, Jodi. Thanks, Jonathan. And thank you for all for taking your time this morning. I hope everybody is safe and well out there. Certainly as a law firm, Cohen Kinne has been all hands on deck throughout this process, including with many of the folks on the panel with me this morning, helping to, in the first phase, what is the CARES Act? What does it mean? Read 850 pages of it, and then start to work through the regulations. What is the PPP loan program, and how do we get resources deployed and information out to our clients as quickly as possible to make sure that everybody can take advantage of it. I think the first phase was folks trying to determine if they were eligible for it, and then I think first and foremost was let's try and get as much out of this as we can in the form of loan proceeds. But then I think we took a step back with some of the guidance, such as the 75-25 threshold, which we'll talk more about. And now it's shifted into more of a thoughtful approach to how can we spend these proceeds, get loan forgiveness during the 8-week period, and how can we think more strategically about it. And then to Jodi's point, we've shifted from some of the more traditional larger clients, LLCs, corporations, and now we're into the sole proprietors and independent contractors. So it's been ongoing, it's been full time. We've quite frankly enjoyed trying to help as many of our clients as possible. If there are any of you out there that have questions, feel free to reach out.
Thank you, Dennis. Bob, what's been going on at MountainOne?
All right, thanks, Jonathan. And again, my thanks to you and 1Berkshire for putting this together. It's incredibly important for us to be communicating to businesses in our community, and this is a great forum to do so. It's kind of interesting. As a business, like most businesses, we all have business continuity plans, and such as what would happen if there's a fire, what would happen if there was a flood, what would happen if there was a blizzard, how do we keep operating? I don't think any of us ever envisioned that we'd be utilizing all of our business continuity plans all at once. And quite honestly, that's what's happened in the early phases, beginning in the middle of March, implementing business continuity planning to ensure that that operations were maintained, that customer service was maintained, and having that balance of employee safety and customer safety at the forefront. So that was the initial thrust. And now we had moved into the PPP program like every other financial institution. And quite honestly, it was a gold rush mentality in terms of applying and thinking it was the lifeline. And what has become interesting as we have moved through, and I think we have well over $40 million dispersed and still working on phase 2 for another 8 million or so, that we're understanding that PPP as originally designed is not the cure-all. And there's going to be a lot more confusion 8 weeks from now when the forgiveness period starts. And throughout this process, we've seen a good intention that when you think about adding, close to $700 billion into the economy over a 1-month period, that's an incredible task. But much like decisions that were made by any of us in March, they may not be as relevant, or they need to evolve or change. And as the lockdown and stay at home and the economy has been shut down over almost a 2-month period now. And I think that we will be entering into a phase now where we talk to our elected officials and discuss how PPP should evolve for business use, not only for the stopgap measures that it provided in terms of companies hemorrhaging cash or wanting to keep employees on the payroll, but also how can we use this money to reboot these companies once the economy reopens.
Well, thank you for all that, Bob, and thank you for all the work that the bank has done thus far. So we'll turn to Gary. Gary, I've heard you informally referred to as the Dr. Fauci of the PPP program. So tell us a little bit about what your shop has been up to.
Well, first of all, I want to thank everybody on this call today, because this has been, I think, one of the most incredible team efforts helping the small business community in Berkshire County navigate this process that I've ever seen in my 30-year career. Just thanks to everybody on this call. I know we've worked really closely together. And our office, the week before Governor Baker actually issued the shelter-in-place order, our team started working remotely, and our office has been designed to be able to do this for many years now, and it's been working seamlessly. So our team, 90% of it's been working remotely since the week before the shelter-in-place order was put into effect. But from the first day that the CARES Act was enacted, our research team started digesting the key terms and conditions of that act. And within the same day that the act was released, we began a program of networking with all of our clients daily, helping them to try to understand the act, how it could benefit them, how they could benefit from the various offerings within the act, and then began helping them navigate the process to get a loan. We then assisted our clients with calculating the maximum potential loans, which was critical, completing and filing their applications, and assisting them with completing applications, and worked as a liaison basically between the clients and the banks to get these applications to go through smoothly. And we've been doing this all the way through the funding process, which is where we are today. And I can say that for our clients, the ones who qualified for a loan, that's important to understand, the ones who did qualify for a loan, 99% of them have gone through all the way to funding. So we've had incredible success, and the banks have just been incredibly helpful in help getting us through that process. So now we're entering the phase of assisting clients managing these funds and tracking these funds to make sure that they qualify for the optimal forgiveness side of the loan, which is becoming challenging in itself. Lastly, what we'll continue to do is work with our clients all the way through the forgiveness process, which is an application process. It is not automatic. And that process can begin no sooner than July 1st, and it ends on August 15th. So it's a very narrow window. And that may change because this whole process has been changing daily as we've all been going through it. But right now, that window is July 1st, August 15th to apply for forgiveness and provide your banker who gave you the loan with all the necessary information to help them calculate if and how much your loan will be forgiven. But it's been a great, it's been a frustrating process for a lot of the small businesses. But the way that we've made it successful for our clients is really working as a team with everybody on this call and many, many others in the community, just to help the small business community understand this and just help facilitate the process, one that has just been incredibly frustrating for everybody.
Well, thank you, Gary, to you and your team, for your patience in all this and being able to provide assistance to so many of our key businesses. So we'll jump right into our first real kind of roundtable topic, and it's around the issue of readiness and how businesses can be prepared to work with lenders. So I guess I would maybe start with Jodi and Bob from the banking side, but what have those businesses who have successfully received support consistently done right? And then from that, what do others need to be doing to be better prepared?
Thank you, Jonathan. That's a great question. I think in many cases, it's about making sure that you have documentation, that you know how your business is doing. Whether you're a large business or a small business, you need to keep good records about where your money's coming in and where it's going out. One of the number one reasons that we've had a slowdown with our PPP application pipeline is because people aren't ready. They don't have their taxes ready, their profit and loss isn't ready, they might not know where they stand. It is really key to have that information in front of them. And then it's not just a lesson for PPP or COVID-19. Having accurate records so that you can make good business decisions in either times of crisis or times when your business is thriving is a really key piece to it. You don't have to go out and hire an expensive bookkeeper. You can hire Gary. We'd love to, everybody should hire Gary. But sometimes you just need, a pad with some paper tracking your ins and outs if you're a very small business. So that's what I would advise now and going forward for small businesses to be focused on your record keeping. If you need some help doing that, there are some resources in the community that can help you.
Okay.
Bob?
Yeah, I would pretty much echo what Jodi has said. And, from my perspective, once we get past PPP, we're really, maybe in the second inning of this ball game. And we're going to, as institutions, we're now going to be moving into the loan deferral phase for companies with still struggling with cash flow that PPP did not necessarily address for them. And we've been doing that on the consumer side. All of us have all financial institutions have consumer loan deferral programs for people who have been impacted by COVID-19. And we are working with our borrowers, commercial customers who are being impacted. And a couple of things. One, always in good times or bad times, have a good dialogue with your bank. The last thing we want to hear is a surprise, because it really limits our options. If we're surprised and we're so far down the road that there aren't viable alternatives to your current loan structure. So number one, have that dialogue, have that communication with your banker. Second, as Jodi noted, have good financial records. It doesn't necessarily have to be very sophisticated. Be on an Excel spreadsheet, your profit and loss, your income taxes being completed on time, so that we have a basis to understand what your business looks like. And third, I really want to emphasize the importance of focusing in on cash. Cash is king. And again, whether it's a crisis or your normal business cycle that we're in, you should be managing to a rolling 13-week cash flow, so or you have a good idea of what your cash position is going to be on a go-forward basis. This prevents you being surprised. So as customers approach the bank now for assistance, I just want to reemphasize the points that Jodi made about having financial information, current financial information, so that we can sit down with you and help craft a solution in the short term, as well as be thinking about the long term as well.
Hey, Bob, great point about the relationship with the bankers. And I think that speaks to one of the first questions that Jonathan asked today, was about how people were successful before or were successful early on in the PPP process. And that's because they had a relationship with their bank. And that is key. Many of you might not need to borrow or have had to borrow in the past. Now is a great time to start establishing a relationship with a banker. It doesn't necessarily need to be your commercial lender. It can just be having a resource in the financial institution that you go, so people recognize your name and are able to provide guidance when you have questions. So if you don't have a relationship right now with one of the great community banks or the credit unions, now is the time to bring it local and to start building that relationship.
I totally agree. One of the benefits of dealing with a community bank or a credit union is who makes the decisions in the organization. You can go to Jodi, you can go to John Bissell, you can go to Jay Anderson, Charlie O'Brien, Chuck Leach, myself. We know who you are, and you should know us. You should know the people that report into us. Again, we're very personal and hands-on in terms of our operations and our approach to our customer base and our communities. So it's very easy to get in touch with us. And we're not so far removed that we don't understand what you're going through. We are all small businesses as well. I wanted to dispel the notion that we go downstairs to the basement and print money. That doesn't happen. We're a small business just as you are. We have the same cash flow needs as a regular business. When we're not, when we're deferring loans, when we're not collecting interest income or fees or whatever, that's no money coming in revenue for us. yet we're still maintaining all our expenses such as overhead, employee salaries, things of that nature. So we understand what you're going through because we're in that same boat with you as well. And, I think that helps with, some of the empathy that we can have towards the situation you're struggling with. And yet we also have a broader perspective because we see a lot of companies, we see what's being done successfully, and it's our job and our responsibility to make sure we're sharing that type of information with you to help make you a better business person. So having that connection with a local community bank, credit union, I think really becomes highlighted when there's a time of economic crisis.
I think that's a great point, Bob, and it's important for everybody in our region and the business community to understand. We have such a breadth of local community banks, regional banks that really look inward to how they can support the community, and I think that's been a huge asset for the Berkshires and our ability to respond to this. Hey, Dennis or Gary, do you have anything you want to add on the readiness topic?
Yeah, I just wanted to add, Dennis, Jonathan, that anybody that goes into business, whether your business that is grown to multi-millions or you're a small mom and pop business, you need to have a team of professionals to not just help you navigate something like this, which is just clearly unprecedented, but to manage through your everyday business. And that team should consist of your banker, your attorney, an insurance advisor, a retirement planner, and an accountant. So many people don't do that because they're afraid of the cost, but these people can actually help you save money. And then when it comes to a situation like this that is just clearly unprecedented, they'll help you get through it. The other thing that I just wanted to add is that this is a clearly unprecedented, situation and process. And I was having a discussion with one of our clients yesterday, who's a medical practice business administrator, and she's been able to kind of manage this process pretty easily every day, but she's constantly being hit with changes in their business environment day after day after day. So she was used to new curveballs being thrown at her every day. This is the biggest curveball that anybody has ever seen. And the miscommunication that was going on from the federal government and the Small Business Administration just made it very, very confusing for the small business person, the average small business person, to really understand what do I do? How do I do this?
Right.
But this is where the professionals can help you in situations like this, because we are used to dealing with curveballs being thrown at us every day.
And one thing I'd like to add, Jonathan, is just for those folks who missed out on the first tranche of this, I think the important thing is to not get discouraged. In some ways, it's actually advantageous, because what's been happening since that first tranche is we've had more guidance with respect to forgiveness, how that forgiveness is going to work and over what time period. And so people shouldn't feel like they missed the boat. There's a new round out there, and who knows, but most likely there may be yet another one behind that. So use this time to use the information that you're receiving here, online and elsewhere, to get yourself prepared, to get those documents together. Hopefully this virtual town hall will serve to facilitate not only in real time our thoughts, but then how you can move forward to help your organization. I saw one question on the chat from Roger. Good morning, Roger. With respect to EIDL, I just want to use that as an example, economic injury disaster loans. These were one of the first concepts to come out of the CARES Act, and they've since been turned into essentially a grant. People thought, there's been fits and starts with this. Right out of the gate, folks thought and were told that within 3 days of applying, they'd have those loans. Unfortunately, the bad news is that's not the case. The good news is, notwithstanding the fact that you may have waited weeks for these, we're starting to see those hit. And so I think your patience will pay off. Those $10,000 what are now grants are starting to hit. That's what we're seeing with our clients. And so if you stay patient, I think you'll see that those will come through. I don't want anyone to think they've missed the boat because for some reason theirs hasn't come through.
Yeah, I'd just like to add, I thought Gary made a great point about surrounding yourself with very good people of different backgrounds, of legal, accounting backgrounds to help you in your business. And just prior to us all jumping on here live, we talked about the remote workforce and as part of the remote workforce, how you become socially distant. As a business owner, you almost have to be the exact opposite. You need to be an extrovert, and you're going to need to figure out how you become an extrovert in a virtual setting going forward for a while. And surrounding yourself not only with your professionals who you have a professional arrangement with, but with a lot of other business people. The worst thing you can do is operate in a vacuum, and you need to be hearing from other business leaders, other business owners, and what they're going through, what challenges they face, how they overcome those challenges. That's where, I think thanks to 1Berkshire comes into play for the role you play and have in connecting business leaders together to have, a forum to share these common experiences as well as these common angst right now.
I'll just add also that from our experience, we've had an incredibly high success rate of small businesses making it to closing and getting funded. Funding is still going on right now, though, and funding is not even just with not for the second tranche, as Dennis said, but the first tranche is also still being rolled out. There are still small businesses as of today that still have not received their loan funds yet because the loan documents, as this process evolved, kept getting more and more complicated. And it became even more complicated on Monday when the Small Business Administration released a list of the businesses who actually did receive that EIDL $10,000 that Dennis talked about. And that kind of turned the tables on the banks a little bit, and they had to revise their loan docs, which slowed the process down even a little bit more. So if you still haven't received your loan funds yet, the banks in this community are awesome. They're great. They're doing a fabulous job. They're going as fast as they can. And I know I've got clients who have closings scheduled for next week already. So please, you have to be patient. But if you have questions, like Bob said and Jodi said, call your banker. They're there for you. They understand.
So let me jump in. I don't want the entire conversation to be dominated by just the PPP program, but I do think this is an important point. We've had a lot of outreach to our organization around the forgiveness side of the PPP and what businesses should be doing to ensure that they will be forgivable loans or serve as grants rather than leave them with more debt after this entire crisis. Do any of you want to speak a little bit to that?
Well, first of all, I'll just jump in real quick here, Jonathan. And first of all, that whole forgiveness process is still being worked out with the SBA. There is no formal final guidance on this, and this is what's frustrating, not just the small business community. It's frustrating the bankers because the bankers are the ones that are going to have to facilitate this process. And we were hoping to have some further guidance today, but what's happened is that they're seeing the delegation of Congress is seeing that the way that the original CARES Act was written in the handcuffs that they put on people for the forgiveness part may not work. And they're looking into revising, giving businesses a longer runway for forgiveness as opposed to this June 30th hard deadline. And so, what's frustrating about that is businesses that have already received their money a couple of weeks ago, their clock has already started ticking, and they're making plans of how to use this money, towards the forgiveness process. So it is frustrating, but this is unprecedented, and everything is moving as fast as it can. but we're hoping for some better guidance, hopefully today or within the coming days, of how the forgiveness process is going to work.
Yeah, and I'll just jump in on that real quick, Jonathan, just to keep everybody's eyes on kind of the tests, the guideposts that are out there. First of all, you have to use the proceeds for covered costs. In a nutshell, you've got payroll costs, you've got mortgage interest, rent, utilities. And so first of all, you have to use the funds for the right purposes. We know in general, you've got to use at least 75% for payroll costs in order to be eligible for that forgiveness. You have to deploy those funds in the 8 weeks following the date of your loan, which is what Gary was talking about. And then you have to return your FTEs, your full-time equivalents, to a certain status by the end of June. And so you've got all these tests that you've got to meet. Guidance is being provided almost on a daily basis. And so it's incumbent upon folks like us, like the folks on this panel, to keep our eye on that and to get that information out there as quickly as we can once we receive it. So again, it gets back to that idea that in some ways, the people that are going to be involved with this next tranche, or maybe have not received their PPP loan proceeds, may be advantaged by the fact that there's more guidance that's being sent out, and hopefully we'll be able to use that to your advantage.
Just a couple of clarifications on what Dennis said. First of all, the 8 weeks starts the day you get your loan. There have been some cases where the date of the loan is different from the day you get your proceeds. It's the day you get your proceeds, number one. Number two, this is a cash basis. It's not accrual basis. It's when you actually spend the money. Number three, the payroll costs, which people are still not realizing what payroll costs include. Payroll costs include salaries and wages, health insurance paid by the employer, retirement plan contributions paid by the employer, and your state unemployment insurance that you pay to the state. So there's four components of the payroll costs. It's not just the wages you're paying your employees. So just a couple of clarifications there.
All right, well, I think it's interesting that the companies that received the first round of PPP money may be at a disadvantage compared to other companies that are now in the second round, because when you look back, say you received your money from PPP, April 20th, to pick a date, a random date. Your clock, as Gary noted, your clock starts ticking that day. Yet we've been in a shutdown. So really, how effective were you using those funds? As every business is different and they have different needs, maybe your employees didn't want to come back. Maybe they wanted to stay on unemployment, as an example. And so you have these funds that you're really not being able to effectively leverage. And that can be a challenge. So my first point is that it's always about timing. And you may look back and you say, geez, my timing wasn't that great. Second point is everybody is focused in on forgiveness. For many companies, it may not be the end of the world if your loan is not forgiven or fully forgiven. It's a cost of 1%. And that is capital. And that 1% cost may be the difference between you restarting your company and not restarting. So you have to think about PPP in a very strategic manner. And again, that goes to having those conversations with your accountant, your attorney, to strategize and figure out the best way to use these funds. And then third, hopefully, we can all be talking to our congressional delegation to make them aware of these challenges and how it would be best if PPP evolves much like the nature of this crisis has evolved. And that becomes better suited for the needs of our businesses as opposed to, this one size fits all solution.
And Bob,
go ahead, Jodi.
That's a quick thing, and that is, this is a really important part, and that is one thing that we've been doing with our clients over the last couple of weeks is exactly what Bob's talking about. Initially, everybody took these loans thinking that they were going to be free money and everything was going to be grand, but realizing, looking back at what Dennis said about the FTEs and how long this crisis is now going on, people are realizing that, geez, I may not be able to get everybody back in my shop by June 30th. And so we started talking about strategizing differently about how these funds were going to be used. And so far, I would say that 99% of our clients who have received the funds and now are thinking that some of it may be a loan for 2 years, they're very comfortable with that because they know they're going to need that capital, like Bob said, over the next 6 to 12 months, not necessarily today.
Jodi, I'm going to let you close us out on this topic.
Sure. Thank you. Thanks, Jonathan. Yeah, I just wanted to tag along on what Bob Fraser was talking about in engaging with your attorneys and your financial advisors on how to be strategic about the use of PPP funds. There are probably a number of callers that are participating today who don't have that vast network because they're either early stage businesses, they're small businesses, they're sole proprietors who may not be able to access those wonderful resources. So I know that Keith Gerard is probably going to kill me right now if he's listening in, but there are some resources that are available to help the smaller business have access to the same strategic thinking and use of funds. So the Small Business Development Center is a great place to start. And there are other resources within the community to help the sole proprietor make these decisions as well. So thank you.
So I want to, first off, I'll give a shout out to our panelists that are responding real time to some of the questions in the chat. Thank you for doing that. That's great. And then second, just reminding all of you listening, please submit questions. We're going to get to Q&A in a few minutes. A couple more topics we want to quickly cover though. And the next one, and maybe we can actually start with Jodi. I know we talked about it kind of in our prep session, but everything we're talking about right now are the programs created to help businesses in the moment. But we also know that this moment is going to lead to another moment that's going to last a while. We're going to be in this interim period post COVID-19, living through COVID-19 for a while, and businesses are going to have a need for capital. Can you talk a little bit about how Greylock's thinking about that, and we can go around the panel?
Yeah, it seemed that the minute that COVID hit, we realized that our economy is going to need to go through a restart, not dissimilar to what we did during the recession and the crawling out of the recession. I think now we're better prepared to be thinking about more of a crisis management and advising our borrowers on thinking about reinventing themselves, right? So our reality, we're not going to go back to where we were January 20th. Our world has changed, and maybe there'll be a time that we'll look back and say that this world has changed, for the better as a result of, but that remains to be seen. Access to capital is going to be key as the small businesses and large businesses think about how they redefine their success, and how they pay their people and continue to grow. I think there's going to be more reliance on some of the SBA programs that have been out there before COVID-19 to help provide working capital to the businesses. And I think that it's going to force a number of us, the bankers, around the table to be thinking differently without putting, without making bad decisions for underwriting. But we're going to really have to be thinking about how we can partner with our businesses in the community to help them restart, refocus, and rehire. Thank you, Jonathan.
Jonathan, I unfortunately, I've been through a number of crises. And I was hoping to make it through my career and miss this last one, but it hasn't exactly worked out that way. But there's some common themes that happen during financial crises, especially for those business owners that survive them. And one of the lessons learned is the need to really pay attention to your balance sheet strength. You know, it's great to look at your income statement year after year, your tax returns, and see what you made, and use that as a scorecard as to whether or not you've been successful. But the other component of your financial statements is your balance sheet. And building that balance sheet and having a strong balance sheet is what gets companies through very difficult and challenging times. The strength of your capital, the strength of your liquidity. So a lesson learned is, you know, understand not only your income statement, your revenue generation, your expenses, but also what it means to your balance sheet. Secondly, and going back to remarks that Jodi just made, as we all try to move past the pandemic and the shutdowns, we really need to look at every business and understand its viability as it's currently structured. Does the business model still work in the new normal? And I did see one question about the fact that we have so many nonprofits, and I sit on the board of a nonprofit, and we're struggling with that challenge that, you know, we serve, you know, individuals with intellectual disabilities. How do we deliver our services on a go-forward basis if we're still, you know, socially distancing and not having that human contact? So I think that's going to be an incredible challenge as we all get past the triage here and start looking longer term as to business viability and business models. What is going to work in the future? And that's where, you know, this need for innovation and thought comes into play, because this is, you know, more or less this grand experiment of how we're reshaping our economy for the next 10, 12 years.
I think that idea of innovation, of businesses looking at what others are doing and even in many ways replicating viable pivots that others in their sectors have made is important right now. We've advocated that, you know, we've presented the thought that the higher percentage of our businesses in the community in the Berkshires that are thinking that way, they're thinking about how they survive the next year looking differently, the better served we're going to be as a region to come out of this in a healthy way on the other end. Mm-hmm. So another topic I wanted to just hit on before we turn fully to the Q&A is the question of access. You know, kind of a wrap-up topic before we move to Q&A. But, you know, there are a lot of businesses that have not yet been able to, you know, benefit from some of the resources made available, and there's varying reasons as to why that's happened. But can we talk a little bit about, you know, what encouraging themes do we have that we can pass along to those businesses? You know, how can they be thinking of ways to position themselves to more broadly access resources and technical assistance? And looking inwardly as the community, you know, as a community, we're responsible for figuring that out. So what are some of the missing pieces in our ecosystem?
Jonathan, perhaps you start that with, you have to look at, if they're a small business, you know, what type of entity they are. And perhaps just some clarification. If they're a sole proprietorship, or they may be an LLC that does not have any employees. It's still just them, even though they're an LLC. Those businesses have access to not just PPP and EIDL, but they also have access to unemployment benefits. Even if you're an owner of a small corporation and you're not able to work, the C-19 pandemic has opened up unemployment to a lot of people that it wasn't previously open to. And so filing for unemployment is obviously going to be a lot easier than trying to get a PPP loan. So I would suggest people to first start and look at what their business structure is first, see which direction they should be going.
And I, just with respect to the access issue, Jonathan, I just want to kind of point out some good news, and that is our credit unions and our banks were kind of thrown into the breach. We had SBA saying, we've got these funds and we want to get them out to the street. We've got folks who applied for those loans, and the people that were in the breach were the credit unions and banks. And so anecdotally, what we could say is that all those constituencies that I'm working with are working as hard as they can possibly be working, all hands on deck. And I hate to return back to this idea of the second tranche and the advantages that come along with it. But the fact of the matter is, nobody knew how this was going to work. It was built from the ground up. Now we've got a system in place that I see as functioning as well as can be expected, given the life of this thing. And so, yes, you hear a lot in the news about the people with relationships with attorneys and accountants and banks and credit unions were first in line. And I think for good or bad, that stands to reason, because you had folks like us that were ready to jump in and help our clients. No question about it. Hopefully with this next round, and we've seen that there have been line items and set asides for folks that don't have those relationships. So the good news is the resources are out there. Credit unions and banks are willing to lend. They're working hard to do so. They want to get those funds out to the street. And the question is, how do we help those folks that don't have relationships with attorneys, bankers, and accountants? And not to put in a plug for 1Berkshire, but I will. I think this is one of those steps. We talked about it offline that this may spin off some other virtual town halls, and the folks that are on this call, on this Zoom conference, should reach out to 1Berkshire or any of us and tell us what you need, so that we can put those resources maybe into another virtual town hall and help those folks out.
I'd also add that it's important to understand exactly what are the limitations of banks and credit unions. We are often put in a position as a conduit for the government, whether it's through the PPP program or our role in BSA, Bank Secrecy Act, anti-money laundering, and our roles there. But it's important to understand we are not government entities. So we do not have the resources or all the answers that are going to solve everybody's problems. But we try to make up for that by our investments and our contributions to organizations throughout our communities that do help to serve some of the underserved businesses and individuals in our communities. Obviously, we're all big supporters of 1Berkshire and the role that they play. And there are numerous organizations throughout our communities that banks and the credit unions fund, along with other business entities, to help support and provide services to that underserved community.
Great point, Bob. There was a lot of frustration through the first round with this program. It was widely available. It was one of the programs that had really the least amount of thresholds, that were a least amount of complications for people to apply. So there ended up being more applications and more inquiries than any of us community bankers could handle. And thankfully, between the first tranche and the second tranche, we had time to build some systems, some access, and some capacity to be able to help more people. And I regret if there was some communication breakdowns along the way, but we believe that we've been able to fix that, providing a lot of guidance on our website as well as a PPP helpline. And I know that several of the local institutions are doing the same thing. And we, all of the community bankers here, we are so lucky in the Berkshires to have such a great group of community bankers that are committed to our community. And I hope that everyone on the call that's interested in PPP are able to reach out to MountainOne or Greylock, Pittsfield Co-op, Lee Bank, any of the great bankers that we have to try to get access to the funds if they are appropriate for you.
And I'll just add, even though banks compete against each other for customers, and we all have a common theme, though. We want strong communities.
That's right.
That's how we all benefit. We don't benefit at the expense of each other. We benefit when all of us are doing well. And that includes all the constituents within our communities. So our focus really is on improving the conditions within our community, because that means we'll do a lot better.
All right, I think with that, we'll shift to some questions from the audience. Some of these I think might be a quick answer, or maybe one or two of you can speak to it. Some of them are a little bit more involved, but we'll start with a question. We applied for EIDL and received the number and never heard another thing. What do we do?
The EIDL program has been, and you guys can chime in as well too. It's been somewhat put aside for the moment because PPP took precedence. And what they did with the EIDL, that was the first program application to roll out. And then they changed it and said, okay, what we're going to do is we're going to give you a quick $10,000 advance because they knew people needed money and there was pressure from the federal government to get money into the economy. Then what they said is, okay, now that we got this $10,000 advance, these advances going out, and we got the PPP loan program going, we're going to say that $10,000 really is going to dovetail into the PPP program. And we're just going to wait on the EIDL. There's been a small amount of EIDL loans that have already been approved. And you would have gotten an email from that loan goes through the Small Business Administration, does not go through a bank. And so you would have received an email saying that you were either approved for an amount, and they determine the amount, not you. But those have been very few in number at this point.
Another question.
Yeah, and I guess the thing I would say there, Jonathan, just to return to it, we are anecdotally seeing some of that come out. So unfortunately, to Gary's point, this is directly through the SBA. So it's not like somebody, if they have questions, can reach out to their bank or their attorney or their accountant, because quite frankly, we don't know. The good news is they're starting to roll out. The bad news is there haven't been a lot of those funds have not hit yet. So unfortunately, it's a wait and see approach. I wish I had more.
Understood. Maybe this is a question for Jodi and Bob. Will either bank utilize the Federal Home Loan Bank Jobs for New England program with 0% capital to lend to small businesses?
We use a lot of the Federal Home Loan Bank programs, whether it's from first-time home buyers to some of the community reinvestment funds that have lower borrowing costs. But I'd have to look more into that current program. Quite honestly, the bandwidth of the organization has been focused in on PPP, and we're kind of moving in stages as to the next programs that are out there.
So I think that the Jobs for New England program has been around for a while, unless I'm getting that confused with another one. And I think that we've made some attempts to use it, but the funding was used up. But we are open to all sources of capital to help us redeploy less expensive capital into our community.
Right, it's an annual allotment that comes out in. Again, it's a first come, first serve type of proposition.
A question from one of our listeners. Nonprofits comprise around 25% of our workforce. Are our lenders taking any special considerations as it relates to nonprofits applying for resources in their very different cash positions?
Well, that's kind of a broad question. Every nonprofit is unique in its own situation, and the services that they provide. I think all of us have this very strong track record of supporting nonprofits. We also realize how important these organizations are to our overall economy in the Berkshires, and it goes back to that one-on-one relationship that you should have with the bank and your banker, so that we don't try to put a one-size-fits-all solution into a certain industry or a segment of an industry. So I really encourage folks, as we've mentioned numerous times, to have that dialogue with your banker.
So Jonathan, what was that their question, or were they talking about more specifically with the PPP loans?
I think it was actually more specifically to the PPP. I should have read the question a little clearer.
So are they asking if they're getting preferential treatment or to get their loans through quicker, or I'm not quite sure.
I think the spirit of it. I think the spirit of the question was probably our nonprofits being treated, generally equally, knowing that their cash positions could be very different than some private businesses.
My experience, and Jodi and Bob can speak to this. My experience has been the applications are processed as they come in, without regard to for-profit or nonprofit. And if that's not right, then let Bob or Jodi can chime in. But that's been my experience.
Right. We're not in a position to discriminate against one group in favor of another group. We're going to be scrutinized when all is said and done as to how we treated our applicants, and we're treating them equally and providing as much access as possible to facilitate the approval.
Greylock processed a number of these loans to our nonprofit community, and happy to continue doing so in a first come first serve basis as they're coming in. So I think that to echo Bob, there's been really there's no ranking going on. People put their applications in, and we process them as they come in.
One thing I just wanted to point out about nonprofits and eligibility. For tax-exempt organizations, only 501c3s, some veterans groups, and tribal organizations are eligible. And then with respect to some arcane rules, or maybe some complicated rules about affiliation that SBA has, nonprofits are subject to those affiliation rules when you're talking about 500 employees. And in a nutshell, what that says is, if you've got a nonprofit that is controlling another nonprofit, or both of those nonprofits are controlled by a third nonprofit, you aggregate all of those employees across those organizations. And so I don't think it speaks directly to the question, but it's some food for thought as nonprofits and tax-exempt organizations consider PPP loans as an option.
That's a great point, Dennis.
So another question was dealing with the SBA, and this is coming from a listener that was in the process of applying for SBA funding prior to the COVID-19 crisis. And the question is, what impact does the COVID-19 have on more traditional SBA loans? Have those funds been reallocated to the CARES Act or something else?
Jonathan, as far as I know, the traditional SBA lending programs are available, and I believe that most of the community banks who are SBA lenders are also interested in taking those applications. So if someone was looking for a new opportunity, I think that they should just keep moving that way, of course being very realistic about the new reality that we have in front of us, and also the capacity and resources of the local community bankers at this time while they're navigating PPP on top of a global pandemic.
Right.
Yeah, and just to, oh, sorry, Bob, go ahead.
I was just going to add that under the CARES Act, the PPP is part of the 7A guarantee program, and so there are certain set-asides to keep the 7A program funded. And it's my understanding that some of this money that in the first round that was returned is going into the 7A fund, so that there is availability of guaranteed loans under the 7A going forward for this fiscal year, government fiscal year. However, as Jodi, rightly noted, all hands are on deck at the SBA for PPP right now. So I don't know if there's a lot of attention being given towards guaranteed 7A, traditional 7A loans or 504 loans at this point.
Yeah, I would just add anecdotally that is all right, that there's a separate appropriations for PPP loans, so it shouldn't affect the availability of other loans under the 7A program. And again, everybody has been all hands on deck as it relates to PPP. And now that we've gotten over that initial hump, I have seen SBA loans being funded slowly. And so, I think that's what we'll begin to see, that some of those more traditional SBA loans begin to get funded now that we've gotten over the initial hump.
And Jonathan, we actually have a client who's closing on, I'm not sure if it's 7A or 504, but they're closing on a loan in the next 5 days. So that process does seem to be moving forward.
Great. So I think we'll wrap up with one more question. Maybe Gary can speak to this. This is kind of the mechanics of the PPP program. This is coming from a listener who has received a PPP loan. And the question is, I was told to open a separate account for the PPP. I have payroll taken out of it now. Do I pay utilities from this account as well? And are utilities just gas, electric? They also include things like Wi-Fi and phone.
The answer to that question is, and I'll let Bob and Jodi chime in here. It's not necessarily a requirement that the separate account be set up, but there are some banks who were requiring it. And I think the reason for that is because there's concern that perhaps the accounting systems may not be sophisticated enough to properly track the use of the funds. And then when it gets time to the point of forgiveness, I think the banks were concerned that they were not going to be able to provide, accurate data for them to determine forgiveness. So with that said, if you have set up the funds in a separate bank account, then you should be paying all of your qualified expenses, which we'll just go down the list one more time: salary and wages, employer health insurance, employer retirement, state unemployment, rent, utilities, and interest on mortgages. And they use that term mortgages, but it actually does involve interest on other types of debt, not just real estate mortgages. And the rent isn't just rent for real estate, it's also rent for possibly personal property. If you have a fleet of trucks or something, if you're a trucking company, that you can pay the rent for those possibly out of that.
Yeah, and we have seen many of our customers open up separate accounts that the PPP funds were advanced into, so that they have a better audit trail for themselves internally. It's nothing that we required, but this has been on a customer by customer basis in order to provide an audit trail and documentation for the forgiveness application when that finally comes out.
All right. I think we'll close out the question section, and then just kind of, I'd like to go back to the panel just for, there's been a lot of information, a lot of great insight. But before we wrap up, I want to give each of you an opportunity. Why don't we just go, we'll go alphabetical again with Jodi, Dennis, Bob, and then Gary. But do you want to leave our listeners with any closing thoughts? Maybe it's something technical or something inspirational, but just one more chance to chime in on something.
Jonathan, can we just do, I'm sorry, Jodi, hold on. There was one more question that was popped up that's actually a really important question.
Oh, sure.
Can we just address that real quick? Because I think it's really important. The question popped up about the partnerships and guaranteed payments. And that also would go into the sole proprietors. The person was asking if there's any updates on that. And it's a really, really great question, one that has been challenging. But there was a final ruling. They did issue a final ruling last week regarding partnerships and sole proprietorships. The guaranteed payments, technically, they're not part of what you can apply for a PPP. What you're supposed to do as a partner is you're supposed to apply with your partnership application. But what you use as the partner is you use your self-employment income for calculating how much of a PPP that you as the partner would qualify for. The self-employment income technically does include guaranteed payments. So indirectly, the guaranteed payments are included, but it's your self-employment income is the target. That's what you want to be looking at. And it's the same for the sole proprietors. The sole proprietors need to look at their net self-employment income. That is what they're going to be qualifying for as a PPP for themselves.
Great.
Sorry.
Anybody else want to add to
That's
that?
good. No, that's definitely a Gary question.
Well,
Absolutely.
it's at least our listeners know they're getting their money's worth. We're fitting in every question that we can, but we do have to wrap up. And I did want to just give all of you a chance to just provide a closing thought. So we can start with Jodi.
Excellent. So when you're submitting your applications, make sure that they're complete and read the fine print. Those two things, slow down your applications. From an inspirational standpoint, don't despair. If you are a small business owner, you were very courageous to start your business, and you can withstand this. It's going to take some changing thoughts, and be kind to yourself and know that there's no perfection anymore. So good luck.
Yeah, and what I would add, again, I hate to return to this, but I think it's important because of so much that's out there in the news about access to these programs and credit unions and banks. And I can say locally, every bank that I've dealt with in Berkshire County in credit union wants to get these funds out there as quickly and responsibly as they can. So don't despair, as Jodi said. As she also said, by the very nature of what you do, you've got guts, you take calculated risks, and you got to block and tackle. Bob hit on the fact that we're asking you to do a lot right now. We're asking you to get yourself in a position where you can apply for PPP loans if they're appropriate. We're asking you to get yourself in a spot where when these things start to reopen and people start to come back, you're positioned as effectively and efficiently as possible. And so we get that, but keep your head up, put one foot in front of the other. And again, if you've got questions or issues that haven't been addressed, reach out to 1Berkshire and let us know, because we want to get you the resources that we can to help you as quickly as possible.
Well, I don't know if I have as much of an inspirational message as Jodi does, but I'm more the practical side, and that is, reach out to us. We're going to be transitioning past PPP, and we're going to be dealing with a host of other challenges. So reach out to us. We're transitioning ourselves. We're going to have more people focused in on dealing with one-on-one situations, loan deferrals, loan modifications. Contact us. We want to hear from you. We want to be able to be in a position to help you out longer term, rather than just this PPP program. And then think strategically. And finally, don't get overwhelmed. We're all in this together. We're all dealing with this. And this is where the dialogue with other people is just so important. And in having resources, whether it's from the banks, whether it's from accountants and legal profession, as well as 1Berkshire, is so critically important. So make sure you're reaching out to us all.
So first and most important, if you have not applied for a loan yet and feel that you are qualified for a loan, don't give up. Go after it. That second tranche is still out there. It has not been used up. So continue to try to get a loan. If your application is in the pipeline, be patient. You can call your banker to inquire, but don't badger them, because they are super, super busy in trying to get these applications through. But an occasional call to them saying, hey, where am I? As long as your loan has been assigned a loan number from the SBA, you're in the queue, your funds have been set aside, and you will get your money eventually. It just takes time. For those who have received a PPP loan already, The next 8 weeks is critical to you in managing those funds. It is a weekly, possibly even daily process. There are calculators out there. We have one that we've been sending out. If anybody needs it, you can email me and I will gladly send it to you, where you can keep track of if you're projecting your expenses, how much of this loan will be possibly forgiven and how much of it may turn into a loan. That calculator is on the regs that are currently in place. That possibly could change though, so please be cautious of that. We also have a template for tracking your expenses just for the PPP program. And it's important to do that. And lastly, what I'm encouraging our clients to do is, as Bob said before, you do have to look at reinventing your business and how you can sustain your business in this new environment. And I'm also a realist too, in the sense that it's unfortunate that I do believe that this crazy thing that has happened to us is going to shake a lot of businesses who are kind of operating on the fringe. And I'm just afraid that we're going to end up seeing a lot of business failures, unfortunately, especially in the very small business community. And that's just unfortunate. Those people that feel that they're on the edge, those are the people that should be reaching out to us or your banker. Don't be a statistic to them during this pandemic. Try to figure out a way to reinvent your business, get in contact with your professionals, and help save your business.
Great. Well, with that, I'd like to say, first off, this session will be available to all of our listeners on our website. It'll go live probably later today. It'll also be played on Pittsfield Community Television and any other outlets that we're able to get it posted on. So this content is there's a lot here, and there'll be other opportunities for listeners to access that. I hope for our listeners that this was beneficial. I know I've learned a lot in this conversation, and it's opened my mind up to some of these confusing issues that we have to navigate. And I hope it was beneficial for our listeners also. And I thank all of you for taking the time to out of your busy days with a lot going on to spend some time here and listen to us. To my team at 1Berkshire, I want to thank Ben Lamb, who's on the back end of this, helping with questions and everything else, and also the rest of our team for helping get this town hall off the ground. And I want to also remind all of our listeners that we'll have another town hall next week, 10 a.m. These will be done weekly for at least the next few months. Next week's topic is actually the food and agriculture economy and how that's been impacted and how that group of businesses and agricultural leaders have pivoted. To our panelists, just tremendous job. I really, really appreciate the time that you've given us this morning. Your organizations have been, up to this task. You've been resources for everybody. So I just want to thank each of you, Bob, Jodi, Gary, Dennis, for your expertise, for your leadership and your compassion through this entire crisis.
Welcome.
Thank you very much.
It's my pleasure.
Happy to help.
Thank you all. So we are going to lose you when the webinar ends, and I'll follow up with this group separately. But to everybody else, thank you. Have a good weekend, and know that we'll get through this together.